All right, let's take a look at the DAX, the German futures index. The bears finally able to get a reasonable looking signal bar. There's a couple of problems with it. One is, of course, that we went far above the high of this bull bar. Bulls along above the high of that bar. This was by the close. We had a bull breakout to a new high. We had a pull back to the breakout point, and then we've had a strong spike up. You might call it one leg, pause, and then two legs. Is an outside bar here, but it's still a bull bar. And I think that little bit of confusion might create a lot more targets for the bears. Certainly the stop is, I think, below that outside bar. We've got a micro double bottom and a breakout. A measured move of the first bar takes you up to about 22,600. A measured move of this outside bar takes you up to 22,900. So we've actually reached a measured move of this trading range. And I think that was part of the reason for the profit taking. When we broke out of this bull channel down here, there's a couple of different ways you can draw it. But when we broke out, we tested back to the outside of this channel, and there was a chance the bulls were going to be able to get some kind of measured move. I've drawn it roughly here, basically a measured move of that channel, looking for the climax for the end of this bull trend. If you're long in a bull trend, you're looking for this big spike to get to all your profit targets. A lot of bears that are looking to start scaling in are looking to start their positions around that. So we reached a measured move of a bull channel. The targets, once we break out of that, are to back to the edge of that channel and back to the midpoint of that channel. You can put a line here that would be down to 21,500 or down to 21,000. I've been speaking about 21,000 for a while now because we just rocketed through that price and we just didn't really test it. And there's this big gap on the chart between 20,007 and about 21.1. And I think that's where we're going to go eventually. Now, this is the bull swing point. So if a bull buys here and gets a bad looking entry bar, well, that bull probably wants to get out. So they're disappointed. They're going to try and exit around the close of that prior bar. So that means that next week when we open, there are going to be bulls, I think, who are going to look to get out around 22,500. They took a chance that this was going to keep going. Now they've got the entry, but they've got a bad looking entry bar. So it's buy the close until it's not. And then I think they're going to get out there next week. This is also a high one in a bull trend. So there's a really good chance that we get back to 22,700 as well. But that might be after a pullback. Generally, if you do something reasonable in a bull trend, you're always in long. You've got about an 80% chance of avoiding a loss on that trade by scaling in. What do the bears see? Well, the bears see that they've got a very small risk and a very big profit target. So selling the close of that bar, trying to get all the way back to the moving average, 21,000, or selling below that low, looking to close that gap, is the reasonable swing targets. But what does that also mean? If you've got small risk, you've also got low probability. This is the first bear bar, technically from here, 1, 2, 3, 4, 5, 6, 7, 8. So an 8-bar bull micro channel, every low above the low of a prior bar. And that means there's likely to be buyers sitting underneath this bar here and back under here. Bears would have to do a lot of work looking to close this gap, run the stops on the bulls, and then try and take the whole leg all the way back down to 19,400. I think that's a bit of a stretch. I think this is just too bullish to make that call at the moment. The bears need a few things. One is next week, they need a follow through bar. So if we look back on the chart to strong bull moves, and let's look at the first bear bar that appears. Many bull bars up. First bear bar got a little bit of follow through, but it's the first reversal. We immediately go higher and run the stops on those bears. Go lower, go higher, go lower, go higher. So you can see if you took every bear short in this location, all you were doing was racking up incredible amounts of losses. So the odds are that if a signal bar triggers, that stop is going to get run. And that's why I say usually that first opposite signal bar is an indication to sell above as opposed to below it. So the bears obviously want it to go straight down. That would be good for the bears. But the odds are we're going to come back above and run that stop. You can see we ran that stop. You can see we ran that stop. And that's what happens in a bull trend. You bet reversals will fail. So the bears are trying to argue, yeah, but look how climactic this is. We're so far away from the moving average. And that's what we spoke about last week. So I was looking for targets to be reached last week, so I wasn't surprised with the sell-off. There were a whole bunch of different reasons for traders to take profits. A lot of these measured move breakout ranges were up here. I think there was a bigger one down here. I know we already hit that. I had a lot of targets around 22.7, 22.5, and 23,000. And that was the story of last week. We hit the 23,000 big round number. That's where a lot of bulls decided to take profits. We went sideways at 22, so that's probably going to be the first stop. So I think we're going to go below this bar and get back into this range. Is this a final flag or is it a second leg? One problem for the bears is that they've got a tail on the bottom of this bar. So this bar here, less tail, good follow through. Tails, more likely sideways to down. I think it's more likely to get some kind of a bull flag. We're probably going to get up and let these bears out. We might get some follow through. The follow through can be deep because if I'm a bull, I don't think I'm in any rush to buy up here, below the bar, back in this trading range. By the time we go sideways, this moving average is going to be up here, and that's probably going to be the end of the bear run. Anyway, good place for bulls to look for another buy signal. Depending on what happens next week, I think it's important. It's going to tell us whether we're going to trigger a couple of legs sideways to down, or the bears will get bad follow through. What would that look like? No trigger. If the bears don't get below this week's bar, we go sideways, then there's a really good chance we're going to go right above the high of that bar and stop those bears out. So always in long, better to be long or flat. I think bulls have taken profits. We've hit targets. We're at a measured move. So I don't think there's any reason to get in here. If some bulls will be buying the close or buying lower to get out break even. But I think we're about to enter a pullback. And that's DAX on, now I'll just go through my checklist to make sure we covered everything. So momentum, obviously the upside. We hit big magnets at 22,700. A lot of spike measured moves. You're welcome to watch my prior week's video where I went into detail with all those measured moves. Obviously always in long. We've had a spike, a pullback, and a channel. The channel being the low of trading range down here. Expanding triangle, typically a continuation pattern, probably coming back to that low or the middle of that range is a good place to be. Got a measured move. And now we're going to go back and test all these open gaps. Yep, so I think we covered it. So that's DAX on the weekly chart. Okay, so let's have a look at this chart. And I mostly want to focus on what's happening here. So there was a definite change last week. Okay, Wednesday, Thursday, Friday. That's because we hit 23,000 and we sold off. So we had a couple of spikes up, 1, pause, 2, inside bar, 3, and then we immediately ran that stop on that last leg. And because we've run that stop on that last leg, it's put the market into a trading range, and there's a good chance that we're going to measured move back to the moving average. Here we are back at 22,000 and back to this tight trading range. What do bulls see? Well, 1, 2, 3, they had basically a wedge, broke out and failed. If I just take the measured move of this tight range, spike pullback channel, here is the trading range, measured move up. So these were some of the targets I talked about last week. Now what happens on the way back? Well, usually where that wedge breaks becomes a test target. That's also the moving average. So is it always in long or always in short? Well, we just took out a swing point. So I think it's a trading range at the moment, even though it's been a strong bull trend. And that means I'm expecting 2 legs sideways to down for this parabolic wedge top to correct back to the moving average where traders are going to decide. This has just been way too bullish for way too long. If you look back at the market here, you can see when you have periods of drastic acceleration, we have a deep pullback. Huge acceleration, vertical, big pullback. And so now when we're looking here, where was the last really strong swing point? We broke out of that range there. So we broke above that range and came back. There hasn't actually been a lot of strong support layers on the way up. So there's a chance that this can sell off much more strongly and run down to the next line of stops. This is actually a bull micro channel all the way up. Okay, so technically, where's the stop location? Can be all the way down here. I don't think it makes sense to have it all the way down there, particularly after so many legs, but you can at least measure this leg from there and say, well, a 50% pullback is here, 22,000, moving average. If this is going to be a trading range, wouldn't be surprising if we got all the way back to the top of this wedge and to this area of tight trading that happened there before. Tight trading ranges become magnets for tests later on. If I turn gaps on, closing this gap, these are all reasonable targets. So what do you do here? you've got 3 bear bars. It's very rare to get 3 bear bars in a bull trend, and that means this is likely to have a second leg sideways. Can you sell here? It's usually difficult to sell close to the moving average after this spike. This spike has broken a swing point, so I don't think this is the best sell at the moment because we're still always in long in a very strong bull spike on the monthly and the weekly chart. I think there's still bulls that want to get out of their buy signals up here. And if there's going to be an attempt for the bulls to get out, then there's probably going to be a better sell around about 22,700. So what does that look like? Some kind of pullback up here and then some kind of sell off to 22. I think that's a reasonable approach. Usually this first leg down breaks a swing point. You can see we've broken a trend line, and then that means, okay, bulls need to take profits and get out of the way. Bears are going to start selling, and we're going to bring it down to where bulls want to buy again. If you go back to strong bull spikes, here we got to the moving average. Bulls had a chance, then we went down again for a second leg. Here we went up, came down, sideways, then second. Here, 3 bars down, sideways before the second leg. So there's really no rush. You can look at the market and say, yeah, but I can see this one time that it just sold off. Yep, and that's that one time. But we want to be able to do something repeatedly in trading. So I think selling in a bull trend is a bad idea. If this is going to be a trading range, well, where's the top and the bottom? That's probably the top. The bottom's probably the high here or the moving average, and that means you need at least 22,500 or up here to scale into those shorts. So bear micro channel, sellers probably above the highs of those bars on the daily chart. What about the opposite view? Can you be a buyer here? Well, I think 3 bear bars is usually not a high probability buy. If you're a limit order bull and you're stuck up here, you really want a buy signal to buy above. It shows you there are other bulls in the market. So what do we go through? Momentum, magnets, measured moves. Yep, we had bulls taking profits. If you didn't take profits at 23,000, then you see this bear bar, reasonable to take profits. If you haven't after 2 or 3, well, then you need to start recognizing that this is going to have a second leg, at least sideways to down. There is a chance we get a vacuum move into support if those other bulls give up. Gaps and pullback distance, well, we think tight trading range is down here. We're already in the lower third of this range, but where is the lower third? Is this the trading range? What I said earlier is I think it's reasonable to keep the low of the range here for now. 50% is a moving average, lower third would be here. And that's DAX on the daily chart for next week.